Hello, everyone, and welcome to the High Tide Resources live corporate webinar. This is David Vidala from RBMG. High Tide is currently private and will be publicly traded on the Canadian Securities Exchange by the end of February. Joining us today is the Director and Interim CEO, Steve Roebuck, who will be going through High Tide's investor presentation. This will include an overview of current operations, recent achievements, and upcoming milestones. Please note, this presentation is being recorded today, Friday, February 11th, 2022, and will soon be made available on the company's website at hightideresources.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. High Tide has a full disclaimer on page 2 of their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Steve. Steve, the stage is yours.
Thank you very much, David. You made mention of a lot of things happening in February, and it's been an incredible last couple of weeks. Just on, I guess it was 2 days ago, we announced that we are proceeding with the shared dividend. Avidian proceeding with a shared dividend of High Tide Resources. So everything that we've been working towards for the last 6 months is really progressed. So I'll touch on that in a couple of those slides as we go forward, and more about the project as well. But important things to remember: we should be trading on the CSE by the end of the month. An important date is February 17th, in which we will. That's the date of record. You need to be a shareholder of Avidian Gold, the parent company, by that date to participate in the free share dividend. So, but I just wanted to start off with that and let our listeners know to pay attention to some key dates coming up. So let me just start to advance through the deck here. As mentioned, the cautionary statement. Thank you very much. So High Tide Resources, a little bit of a corporate snapshot. David mentioned we are currently private, but within the next week or two, we will be a publicly traded vehicle. We'll be listing on the Canadian Securities Exchange. It's a spin-out from Avidian Gold. That's the relationship. Avidian is focusing on precious metals in Alaska and Nevada. And we had been funding High Tide for a number of years as it went through its process of going public and accumulating good projects in Eastern Canada. And what we had was a mix of Canadian assets, US assets, precious metals, and base metals. And this, by the spin out happening, this really cleans things up for everybody. The dividend, as I've mentioned, is roughly 9.4 million shares. So that works out to roughly a ratio of 17.6 to 1. So if you own 17,600 shares of Avidian, you get 1,000 free shares of High Tide, and you know that everybody loves free. So let's now start to focus a little bit on High Tide. We've got 2 projects. They're in Eastern Canada, between Quebec and Labrador. They are adjacent to all the existing infrastructure, and that includes rail to port, hydroelectric power, a number of working cities like Fairmont, Quebec, Labrador City, and Wabush. So you've got skilled workforce, airports, everything that you actually need to be successful in mineral exploration, and again, more so in mining. Those 2 jurisdictions, Quebec and Labrador, rank very, very highly in terms of investor attractiveness, number 6 and number 8. Our focus on the commodity mix, our primary asset is the Labrador West Iron Ore Project, but also with the Lac Pegma Project in Quebec, That's more copper, nickel, cobalt, and zinc. So those are key elements and that are required in this evolving decarbonization, so to speak. So these are all key elements for everybody. So on this slide here, I'm showing you, we anticipate being listed in 2022, and that's now kind of set date by the end of the month. I've already mentioned that share dividend of High Tide shares to Avidian. This is what the share structure essentially looks like. The key takeaways on this is, number one, a large portion are going to be escrowed. So there'll be only a small float out there at when we go live. And another thing is the cash. This is a fully funded company. We're going to be going public already with approximately $3 million in the treasury. So it's not as though we're going out and saying, okay, let's pass the hat and raise some money. We've done all that heavy lifting and that hard work. It's set to go. There's no debt. So we're in a really good, good tight share structure. All the shares are in friendly hands, and I think that we can really quickly drive value into these projects and see some real meaningful share appreciation. The directors and the management, Steve Altman is our chairman. Here is, I'm kind of listed here as number 2, interim CEO, president, director. I also wear the geology hat at times. And then the rest of the board, Joe Poveromo, Serge Pelche, and Carol Seymour, all experts in their fields and key people within our board. So we have, I'm a little bit of a crossover between Avidian Gold and High Tide, and I carry the title interim because in time I will step aside and just continue on more as a director's role. And then as we bring in a full-time CEO and president. So that will happen at some point in time. And I guess that's just about it here. So we're in the Labrador Trough. I've mentioned that before, and I call it safe, secure, and accessible. And this is important because those are the things that make investing in a company and more so is when these projects go to that next level and a company who is an iron ore miner decides to take on these assets. They want to know that the infrastructure is in place, that if they're going to invest, $750 million, $1 billion, whatever it takes to build a modern iron ore mine, that the security is all there. And you can see the images on the right. They're showing you the loading facilities, the power, the rail. And this is important that the QNSL, this is an open carrier rail. This is not private. There is excess capacity on the rail and excess capacity at the port. So those are important things. And you look at the Labrador Trough, that's over 2 billion tons of iron ore has been mined in the Labrador Trough dating back into the late 1950s. It all started up in Shefferville, and the cluster that you see up here, kind of Canada's DSO, about 55% iron. They actually found, the miners found when they moved down to the Labrador City Fairmont area, they actually had a better quality, lower grade, but a better quality product. They could make a better quality product, something along the lines of, Fe62 is the base benchmark, which is right now trading at 150. They're producing concentrates and pellets that range at about 66 to 68%, which go for a major premium. But I won't get into the iron ore market at this time. Let's just stick to what High Tide is doing. This map here shows our 2 projects and the relationship between them. On the Labrador West, it's a significant opportunity. We're daylighting a brand new project, very, very close to all the infrastructure. The Carroll Lake mine actually expands right up to just our edge right here. There's 1 billion ton potential. That is clear. It could even be higher than that. We've got a good land package of approximately 2,500 hectares. I've already mentioned the common carrier rail. Now, on the Quebec side of the border, in Lac Pegma, where our copper, nickel, cobalt, these are the EV batteries, metals that are in big demand at this point in time. Historic exploration, one round of drilling in 1955, 1996 comes along. There's been more drilling done, and I'll discuss that as we go forward. And again, you can see on this one here, there's actually a hydroelectric power line that cuts right through the project. So that's incredible in terms of access overland, access down the rail corridor, or sorry, down the power corridor. And, you know, if this project does advance to the stage of being a mine, you've got hydroelectric power, and that's going to reduce all of your costs going forward. So just on Labrador West, mentioned already the 1 billion ton potential. This will actually belong to Rio Tinto going back into 2010 to 2012. Iron ore kind of dropped out of favor for a number of years, dropped down to $40. They stopped doing work on it. The project became available. I picked it up in 2019 in an agreement with Altius. So they did 18, they drilled 18 holes, 4,200 meters, with some of the best results being almost 280 meters thick of almost 30% iron. Fast forward to 2020, or actually at this point in time, move backwards to 2020, we drilled 4 holes, and we actually topped that with about almost 315 meters of almost 30%. So what you're seeing there is thick beds of iron, and that's how you build up a deposit very large with a smaller footprint. I think that's an important thing. And we issued a NI 43-101 technical report in 2020, and what we plan to do going forward is actually turn that technical report into a resource. So I'll discuss that in the next couple of slides. You know, this map on the right showing you its proximity, the drill hole, the historic drill hole locations from 2010, 11, and 12. And what we've done is we've used that drill core, which we do have in our facility in Labrador City, and we've been able to relog it, resample it, and ensure that we've got, you know, everything is as it's stated. So we're in good position there. When I look through the notes that came with the drill core and all the paperwork that came, Rio Tinto's internal notes stated that it should be possible to produce a high quality, low impurity concentrate at reasonable grind sizes. So that's music to your ears, that you know that you've got now. We've got potential for a large footprint and a clean product, and that's really critical. And that's what makes a good concentrator a good pellet, and that will be attractive, very, very attractive to the iron ore market. Those are the 4 drill holes that we drilled in 2020. That's the general location. I'll show you what that looks like on sectional view. So if I'm standing to the southeast, looking to the northwest, 2 of those holes on the outside, they encountered drilling difficulty, so we unfortunately had to abandon them short. But the 2 in the middle, they made it all the way through the iron formation and then popped out at the bottom into like the Wishart formation, which is essentially a quartzite type. So we'd already know that we'd made it through. So this is really where we look to continue to expand the resource and build up our knowledge. So we relogged all the drill holes from 2011 and 2012. We're doing our own metallurgical analysis. So this group in Quebec City called COREM, who are global experts in mineral processing, and especially in the iron ore trade. They work for all the iron ore mines in the area. They're involved in the project. We established common lithology codes between what we did in 2020 and 2011. So we're putting it all together. We're getting a geological model. We've got a drilling contractor under contract at this time, and we're fully permitted to drill. So again, you know, with cash in the bank and permits in hand, it's go time. So look for us to move that. And just kind of maybe, I think this might be the final slide. What we look to do is stay on the metallurgical test work. We're going to be drilling 5 to 7 holes, approximately 1,750 meters to 2,500. We're targeting a resource around 500 million tons. And by the autumn of this year, and we commence a PEA level, and I think that's all manageable and doable by the end of this year. Certainly commencing that PEA, but we'll have that resource out. So this is not something you're going to have to wait for, you know, a year or 2 or 3 to get done. We know where the iron is. We know where we need to drill. This map that I'm showing here on the right hand side, all you need to do is follow the color code here at the bottom. If you want to get 500 million tons of inferred, it's going to require these 5 holes. If you want 1 billion tons of inferred, these 8 holes, et cetera, et cetera. So through a combination of doing this, That's how we're going to expand our resource, and that's how we're very confident in what we're about to achieve on this, and the milestones we'll be able to get there. Now, I mentioned Lac Pegma, lots of exploration potential, last explored in '96. It's a copper, nickel, cobalt deposit with significant exploration upside. There's also a zinc deposit within a kilometer just to the north. As you can see, there's a Hydro-Quebec power line that cuts right through. So again, it's extremely been a great location. And there's a little graphite deposit just a few kilometers to the northwest. So it's an interesting geological domain in which you've got these assemblage of commodities so close together. So this is me over the last couple of years. That was me on the project wearing that red sweater in 1996, using my high-tech phone at probably about $10 a minute. And there I was last summer revisiting where that same spot, the same drill core, and I could even recognize my handwriting still on the drill core. So that was kind of cool. There is a historic non-43-101 compliant reserve, or quotes around that, using the word reserve as opposed to resource back in the day. But you got about 2 million tons of 0.62 copper and 0.34 nickel and 0.03 cobalt. It hasn't been sampled for platinum and palladium, and it's absolutely, there's a lot of exploration potential around it. It's not closed off. We've never found the feeder in which where is all this magmatic sulfides coming from? That's to be determined. So there's more work that needs to be done. That is not me, just a chap that looks like me. That's our driller at the time on the right-hand side. No safety glasses, smoking at the time, but that was the 90s, and I guess that's the way these guys, the drillers, rolled. But what I want to show you is that on that table, you can actually see some, significantly wide intercepts of copper and nickel. And one to draw your attention to is that 18 meters of 0.73 copper and almost 2% nickel. So thick intercepts near surface. This is kind of a very interesting scenario. So with that kind of wraps up where we are right now in terms of just the projects and that presentation. My contact details are on the right-hand side. You can pick up the phone. You can call me at any time. And then send me an email to sroebuck@hightideresources.com. So Dave, I'll move it back to you. Maybe if there's anything that I've missed, you can kind of remind me of that.
No, Steve, thank you very much. That was very insightful, and thank you for sharing the High Tide Resources story and opportunity. Again, the February 17th date, why is that important again? Just to reiterate for everybody.
Okay, February 17th, that's the date of record. So you really want to be a shareholder of Avidian Gold if you want to get free shares of High Tide Resources. So, I think we're trading currently at about 8 cents Canadian at Avidian. It's a bargain at twice the price. And then you get the extra bonus of the free shares in High Tide. And then that gives you exposure to iron ore and battery metals projects. But certainly the iron ore is going to be our flagship for this year for sure.
Terrific. Thank you very much, Steve.
Okay, cheers. Thank you, Dave. Bye-bye.